How to trade this off the charts bull market, that's what we're going to be talking about today on 3 Minutes. Today's article on the website is how to trade this off the charts bull market. That was a question I got by email, and so I went through the analysis a bit on our blog post on the website now, realinvestmentadvice.com. But wanted to visit with you here about it as well. Look, trading markets is simply a function of understanding the direction and trend of prices over time, and it doesn't have to get complicated. When it comes down to technical analysis, there's millions upon millions of combinations of indicators that people use to try to figure out what the market's going to do next. Don't worry about that. Keep it really simple for yourself. Just a couple of technical indicators can do a good job of telling you the direction and trend of the markets, because as investors, all we're trying to do is maximize our gains while markets are rising and trying to the best of our ability avoid the sharp declines. Breaking this down here real quick on our chart, we've got a 50-day moving average and a 20-day moving average. All those tell us is what prices have been doing over the last 50 and 200 days. And what's important about them is that they act like gravity over time. And going back throughout this year in particular, around options expiration week, which is the week we're in now, markets tend to correct back to their 50-day moving average as those options have to get rolled over. Stocks have to get sold, rebought, options rewritten, etc. So that has tended to put pressure on markets previously. But how do we know how far we are from those moving averages? Well, a very simple Bollinger Band at this point, just something telling us what the standard deviation from the 50-day moving average is. Currently, markets are fairly extended above that 50-day moving average, which suggests there is some risk of a correction at some point here over the next few weeks. What could cause that? Well, again, we have options expiration and we have mutual fund distributions coming up. That could put pressure on markets here over the next 3 weeks, and a correction back to the 50-day moving average wouldn't really be all that surprising. Also, adding something like a RSI or a Williams %R indicator as an example can also tell you when markets get overbought and when they start to get oversold. That suggests that when they do get down to the bottom of these trading ranges in terms of being overbought or oversold, the opportunity to add money back to equity exposure is more in your favor at that point. And again, back in June and July, when we were up here at this range of the market, we were talking about reducing risk in portfolios because of these very same things. We had an indicator of a MACD also telling us that we had a sell signal in place, just like we do now. And markets eventually corrected back to the bottom of the Bollinger Band. And right around this area in late September, we started writing about adding exposure back to portfolios. So again, it's not an all-in or an all-out situation. Look, we know this market is very extended. We know it's very overbought long-term, and valuations are extremely elevated. Eventually, that's going to have an impact on market returns going forward. You're going to wind up with a much bigger correction for one reason or another. But for now, we have to maintain and participate with markets while they're rising. And some simple technical analysis can help dictate when markets are exceedingly overbought, when you should be taking a little bit of risk off the table, and when there's times when there's opportunity to put money back to work. As is always the case in managing money, it's just like playing poker or anything else. You don't bet all in every hand. That's how you lose. The whole point here is to manage the size of our bets relative to the hand that we're being dealt. Right now, that hand suggests being a little bit more risk averse, but probably sometime around the second week of December, I suspect that we'll see a bit of a correction here because of where conditions are currently. And we'll have an opportunity to put some money back to work for that end of the year traditional Santa Claus rally. I'm Real Science Roberts for 3 Minutes on Markets and Money. See you next time.